Sir, thank you for your time.
Thank you.
We've seen Brent ticking up above $65 for the first time in about 2.5 years. And obviously, a big reason for that appears to be this North Sea pipeline and the shutdown there for about 2 weeks. But is that price then likely to come off when that pipeline comes back on, or is this going to be a sustained tick up in prices for Brent?
Probably the extra tick up in the price is a result of what's happened in the North Sea, because it just starts to say the market's a little more tight. But basically, you have an OPEC, non-OPEC agreement that's been reinforced, and it's going to, for a whole of 2018. And at the same time, we're continuing to see a strong global economy. And that's translated into higher oil demand than many had expected. And that's what's really putting the floor under the price of oil. Obviously, a disruption like a pipeline can affect it. Also, I think there is some geopolitical tension in the price, but the fundamentals are what's really holding the price up.
What does that mean for your outlook for prices then for 2018?
Well, I think that we see things in a kind of high 50s to high 60 range seems to us to be the most reasonable outlook right now. And I think there is more uncertainty. I mean, a big question mark hangs over Venezuela. Its production is going down. The economy is in a shambles, and yet somehow it's holding together. They've just put a general in charge of the oil industry. So people think about the Middle East, but you've got to think about Venezuela too right now.
That's interesting. And in terms of OPEC, they've obviously, as you say, agreed to extend the cuts, the production cuts, until the end of 2018. Are they succeeding in rebalancing the market?
Yes, I think so. The goal here was to start off to rebalance the market. I think it's taken longer to rebalance because the inventories were so high, and inventories are what they're really looking at as their number one indicator. But I think what's happened is this coming together of OPEC and non-OPEC, which was kind of very tentative at the beginning, I think is really now kind of a historic accord between those two parties, and particularly at the heart of it is the relationship between Saudi Arabia and Russia and their determination to make this larger agreement work.
And the Kuwaitis have said recently that the deal could be revisited in June, and that hinting potentially that the cuts could end before the end of 2018. Do you think that's likely?
Well, there's been a lot of discussion about an exit strategy when it happens. I think the message that they're trying to say is, well, we'll wait and see what the market. I mean, I think some of the parties really want to just say, let's carry it out to the end of 2018. Let's not have a lot of speculation up and down. And others said, well, we don't want this thing to get out of control, and if we need to increase the volumes. So I think it was a reasonable outcome from their point of view to say, okay, this is a 2018 agreement, but obviously 6 months, things can change. We'll review it in 6 months, but not with that same degree of, speculation that often, would have been there. What they didn't want was to have everybody in March getting, what's going to happen with the agreement. And March happens to be the month that the Russians are going to have their next presidential election. The outcome is not uncertain, but I think the Russians also want to see stability here.